Happy Friday, traders. It is the 11th of March, 2016, 8:02 a.m. Chicago time. Thanks for joining me. Derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not indicative of future results. The overall sentiment overnight, the euro's down again. It's trading at 1.1152. Euro had a massive range yesterday on that ECB announcement. It ended up selling off on the announcement of lower rates plus more buying. And then the market turned around and pushed way up, I think, into the 112 handle on the euro. Big swing from 108 to 112. The Japanese yen is slightly down. Gold is slightly down. The U.S. Treasury notes are flattish to down. The bonds are flattish to up, and the Bund is slightly up. Dollar index is up, and the S&P 500 up 17 points from yesterday's close, with crude oil leading the pack at 1.64% up. The crude oil is pushing up as a result of the IEA report that says that it believes that the crude oil prices are reaching the end of a long dark tunnel, and that prices have probably bottomed out, giving crude oil a pretty strong boost overnight. But the big winners today, the Euro Stoxx 50 is up 3.09% or 92 points, and the DAX 3.09% up 294 points, 294 points in the DAX this morning. Given all of that, of course, the Nikkei is slightly up. The Hang Seng is up strong. The Shanghai's flat, and again, the yen is down. This combination tells us that the market is allocating to risk assets. The market has a risk appetite today, or in the overnight session. Again, the main news being the EIA release, but also there was some U.S. news. The February import price index came in at negative 0.3 versus negative 0.7. And there was some news out of China and so on. But overall, the market has had a very busy week and is finishing up fairly relatively strong. Let's take a quick look at what we expected yesterday. Here's yesterday's Trader Bite, where I talked about the expectation for today. We were trading way up at 1987 when a Trader Bite was taking place, and the expectation was that it would likely rotate down into the 1980, being the key price right here, the 1980, and then I expected that it would chop around and then push up into the 1990 area. That was the primary hypo. The secondary hypo was a push up immediately, find sellers, push down, and rotate into the 1975 point of control. And what it did, let's take a look at what it did here. Yesterday, what it ended up doing is it ended up executing both. I'm sorry, I'm losing my voice. It ended up achieving both hypos. Very, very odd trade yesterday. We achieved the primary hypo within the first 3 minutes of trading, and then we proceeded. As soon as that was done, right here we hit the 1980. You can see the 1980.50 is the initial balance low, or the low of the first hour, and then we ended up pushing up for hypo 2 through towards the 1999 as mentioned, and then we rotated back down to 1975, a small pop, and then we continued lower and finally took out that 1964 75 level. I believe that level was 1974 and a quarter, maybe, in the March contract. That was the next naked point of control. A beautiful bounce off of that. 10-point bounce basically off of that, could not take out the point of control again, and it continued to rotate lower. And then we have what looks like a corrective move up, which means that we had this drop, pull back, the extension, push up, higher low, and then the corrective move back up into the range. We ended up pushing up against the IB low and holding there, first hour's low, holding the trade. Um, I'd love to have time. My goal is to keep these trader bites as short as possible because most of you need to continue to do your prep before the open and to have a moment of just closing your eyes and visualizing. Hopefully you're doing that over time. It's an incredibly powerful habit in my opinion. But I'd love to walk through all the setups that came up yesterday while I was doing the AMA for stage 5. One of those setups was right here, the pullback towards the 1968.75 with lots of clustered volume over here and a rotation down. Expected a lower low potentially. Did not work, but did get a good 6-point rotation before it started to move up. And again, against the IB. We finished yesterday in what seemed to be a trend day. Okay, so if we look at if we extend the IB, we see that 100% of the IB low is right here, these dots, these faint dots right here. And the market exceeded that. The market looked like it was putting in a trend day with the point of control migrating down throughout the day. However, things changed a little bit once the market went back to the mid and closed right in the middle of the range. This looks more now like a normal variation day. The market did not close in a trend-like fashion. So it was trending most of the day, but this rotation up was from 1958 to 1982. A 24-point rotation. That's an entire day's range in this rotation up into the close in the last few hours. So it did not close in a trend-like fashion. So in a normal circumstances, in a normal auction, you would have a very choppy profile that's continuously moving its point of control down, and the market would close somewhere in the lower quartile or lower 25% of the range. And then the expectation is simple in that we expect the next day to take out the prior day's low, the trend day's low, and then we expect it to rotate back up to rest for the next leg down, or if there's news, the next leg up. And that's not what's happening here. The market pushed lower and pushed back up. I did comment yesterday during that AMA that unfortunately it's rollover, so the delta is a little bit deceptive because folks are selling their March and buying June, or buying March and selling June to be short June. So the overall volume here is not clean or clear because of the rollover. But look at the delta all day. As the market dropped, the delta was pushing up. So it's not a clear indication that there was a buyer, or there are buyers lifting the offer on the way down all day as the market dropped. So I don't know how much to attribute, how much of the delta should be attributed to the rollover volume, the spreads, the calendar spreads playing starting yesterday and throughout all of next week till expiration Friday, next Friday. But on a normal day, seeing this tells us that the market is finding buyers as it's moving down, as it's advertising lower prices. It's finding buyers as buyers are lifting the offer and buying and buying and buying as the prices drop, and it led to this rotation up. But again, with the rollover, it's not clear, it's not reliable to look at the delta for this period of time, at least until next Wednesday. So anyway, we closed in the middle on what looks like a balanced profile. Believe it or not, the point of control has shifted all the way up here. The point of control had migrated throughout the day Let's take a look at that real quick. Let's turn on the point of control. Let's make it white. You could see that the point of control was trending down pretty much the whole day until it started to shift up, and it closed up above. It closed up above the mid. It closed up above the prior day's point of control, which was in line with the day before that's point of control. So the point of control shifting up here really changes things. This is more behaving like a neutral day or a reversal day. And the expectation with this close is that it is likely to continue higher, and it did overnight. I know it seems like hindsight's 2020, but I could have told you that yesterday. If we look at the profile from the low to the high, you can see here that the the um, the bulk of the volume was on the high side, and it looks like a trend profile up with a lot of energy on the top. And when we have that, we tend to say that this portends a higher a higher drift into the Globex session, and that's what we got. So today, looking at where we are, here we are with our, let's reduce these. Here we are with our microcomposite for the area to see where things are. We can see that below us is that 1975 that I've been talking about. It's actually 1974.75 as it says right here, the point of control. And the market is trading above that, way higher than that. So the market currently is trading 1998 and a quarter. It's right here. It's right above pretty much any and all high volume nodes in this area. All of these points of control and all that. It is very bullish right now. And so the expectation coming into today, let's take a quick review of the overnight session. Look at this overnight session. Undeniably short covering profile. Undeniably, this is a classic P-shaped profile. In fact, let's make it look like a P by flipping it, and there's your P. Here it is, stem and heavy at the top. This is a P-shaped profile. This tells us there's a lot of short covering going on. Why? Because the market did not spend much time or volume forming the stem, and then it finally reached its balance point up top. The point of control is near the high on the upper portion of the range. It is flagging. This is a typical push, flag, and more likely push higher type of pattern on the overnight. The market did not like these lower prices. It's absolutely rejecting these lower prices, and I expect that to continue into the session. So, coming into today, I expect that we would not have much of a responsive move down. The expectation this morning is normally to see a responsive move down at least into the value of the MC or the value of the prior day, which is the same right here, this purple line or violet or whatever that is the microcomposite value high, and this gray line right here is yesterday's value high. There's confluence there. If there is a rotation down, I do not expect it much below 1984, which is where we opened yesterday. I expect that it would push down, chop around, and then continue its move up. The target upwards is still that big volume node at 2,450. It is right here, and we start to enter a gap zone above as well. So that's how things are shaping up. The expectation today is a slight response, not much of a response, and then I expect it to take the overnight high and continue higher. Yesterday absolutely obliterated the shorts. It paid the shorts really well, and it obliterated the shorts on the way into the close. We have clearly found a buyer down here once again, and we have in prior occasions. Every time we come down here, we find a buyer. Every time we come down, we kind of reject these prices. They definitely bought these up pretty good yesterday and finished right in the middle of the range, right in the middle of the profile, and right up against the point of control, above the mid, above the prior 2 days balance. It's really a bullish setup. So the rotation down this morning, the responsive selling is likely to be very tepid. and the expectation is the rotation up will dominate. That's will likely dominate. It won't dominate. It'll likely dominate. I don't know what the market's going to do, but the probabilities are playing out that way. The opposite, the second hypothesis is we open. We have a very strong push up as a continuation of the overnight session to disperse that energy that we gained on the overnight P shape, and then we start to rotate down. And if we start to rotate down, I'm going to be very watchful of this 84 area. If it breaks through the 84 area, then my target's going to be this 74, 75 again, and then likely to chop into the weekend. That's hypo 2. Okay, so those are your two hypos. Again, it's Friday. Do not forget that it's not the best day to put too much on the line here into the weekend. It's hard to recover emotionally from that. It kind of tends to fester and create fear and drive you to do things or think in ways that are not productive for trading. So today, pick your spots. I expect it to be somewhat volatile today again. There's a lot of incentive here for the buyers and the sellers to step into the market. So just be calculated. Do not get emotionally or don't act on your emotions. Just be aware, but don't act on your emotions. Act on probabilities. What are the things that you need to see that give you an edge, and then act on that edge while maintaining a strong grip on risk. That's your job. Good luck, and I'll catch you on Monday. Take care.